Our panel discussion today is the future of innovation for the Fortune 500. Our facilitator is Dr. Brett Trusco. He's a professor and an author of 6 books, and he's the president and CEO of the International Association of Innovation Professionals. Welcome, Dr. Trusco.
Thank you. Just call me Brett.
So, Brett, let's get into your theme number 2 here, economic factors and innovation. How is innovation affected by the economy? What were you hoping to discuss here or find out?
Well, specifically what we were asking was the question of when the economy is good versus the economy being bad, how is innovation funding, how are startups, how are anything affecting innovation going to change, whether or not we're in the middle of good times or bad times?
You have a great panel of well-known thought leaders here, don't you?
We certainly do. It's an amazing panel, and if anyone who goes in and reads the details of what comes out of this will see that there's some really good insights in there.
Now, in your summary, you have several key points that we're going to get into here in just a second, but tell us about it.
I have to say, I guess when you think back on it, from the perspective of innovation, you have companies who are more committed to innovation and companies who are less committed to innovation. So as we talked to the panelists, we said, what happens in a weak economy? What happens in a strong economy? And what we discovered was, in hindsight, not to be unexpected, there are certain companies who really see a weak economy as an opportunity. They've got more resources available in humans who might be unemployed. And at the same time, it could be a threat because some companies don't see the ability to raise capital or to invest during a weak economy. And the same thing with a strong economy. There are companies who see it as, well, we've got all the resources in the world and we can spend as much as we want in innovation. But there's other companies that say, gosh, there's so many people trying to be in innovation at the moment that we can't be heard through the noise.
In key point number 1, you sort of compare the differences between large companies and small companies.
Yes, and agile leadership is one of the questions. Is a small company, of course, can be more agile. And so when you look at a small company, they tend to not have as many resources. And one of the things I'm fond of saying is I'd rather have one great idea than 1,000 mediocre ideas. And sometimes small companies have the ability to act on a big idea in a much more flexible and agile and more quickly than a large company does. But at the same time, larger companies have more resources. It's kind of an interesting question as to what's more opportunistic here.
And then we also talk about the effects that the economy has on innovation. So whether you're a big company or a small company, how does a weak economy affect innovation?
A weak economy, if we were to say the overall economy is 1, a weak economy might be a 0.98. It doesn't take much of a move in the economy to be perceived as being a weak economy. You look at the stock market, and the worst stock markets drop 20%. That's 20% of the economy. And what that does is it means that in a weak economy, there are people who probably see things as being worse than they are, whereas there's other companies that are able to see this as an opportunity and say, gosh, this is a good time to hire the best people. This is the good time to invest because the Fed acts like it normally does. It lowers interest rates, and it gives us more opportunities to grow when everyone else thinks that the sky is falling.
And in key point number 3, you get into the opposite of that, which is a really strong and robust economy, or one that's looking really good. So how does that affect innovation?
You see this a little bit going on right now, is a little bit of a slowdown in innovation. Some people might disagree with me, but what we see is at a point where you're at full employment or something like full employment, you've just got everyone working on supplying what the customers want now, instead of looking forward and taking that opportunity to grow a department. Now, of course, some people will invest in R&D, but with so many resources available and the opportunity to grow your organization, you may not want to spend money on R&D. Other companies would take a different approach, and they'd say this now is a perfect time. Maybe not in hindsight, unexpectedly. The answers, they could be yes and no. And it makes it a little tough from this perspective, in that it really does depend on your outlook and your perspective on innovation, your true outlook as a company.
Mm-hmm. And key point number 4, you address finance options. Is this borrowing for the sake of an R&D budget? Is it what you're talking about here?
This is it. Free cash flow in the organization, borrowing. having access to investment funds. When people are doing well, companies are doing well, people tend to have jobs and they're not out looking and trying to start new companies. And so I would think as an investor now, if you've got a portfolio and you're actually trying to find investments at the moment, probably much of what you otherwise might be investing in is inside of a large company who doesn't really need your funds. Whereas when the economy's a little weaker, probably the investors, let's call them venture capitalists, et cetera, probably have more things to choose from.
We often think about how is the economy going to affect the company, but are you asking here, how does the company affect the economy? Are you asking the reverse?
Yes. The thought here was that at a time, and once again, we're talking about the Fortune 500. So we're talking about large companies, and large companies have an outsized ability to affect the economy. One of the things I think is a perfect example right now, and we can't get into it because it isn't a full case study yet, but earlier this week, General Electric got rid of their CEO, who had only been around, if I'm not mistaken, less than a year. And GE was a $500 billion company about 10 years ago, I believe. And today they're only a $100 billion company. Well, about a year ago when they brought in the new accountant, they said, we've already lost $300 billion from our market cap. We need to shore up the finances. They ended up bringing in an accountant trick. What they needed to be doing was they needed to be investing in regrowing to $500 billion instead of digging trenches and trying to hold it at $200 billion. I had this conversation with a number of people, with my students at the university, and at the end of the day, we all agreed that probably GE, that this gentleman probably wouldn't last unless he had something in his personality that made him more of an investor than his background showed. Well, last week, he lost his job, and they've replaced him with someone who appears to be a better person.
Wow, what a really great conversation. I know this all came from a really great panel. Tell us about three that really stood out for you.
Well, the three that are listed here are just amazing to me, and they're so great at encouraging the conversation, writing really deep things about the conversation. I didn't know any of these people when I started, and they've turned out to be people that I just am going to probably be involved with forever. They've got great things, and I would encourage anyone to go in and read the full transcripts of what they've written because it could really be helpful to your organization.
Thank you. Great job on this, Brett. Look forward to our next conversation. Dr. Brett Trusco, again, a professor and an author of 6 great books. He's also president and CEO of the International Association of Innovation Professionals. And I look forward to our next conversation. Thanks again.
You're welcome.